All right, so back to where we were on risk management. This is the second part of it. Okay, so after everything, the balance sheet came out, and Trader B took total of 10 trades like Trader A. He had 5 losses and 5 wins. Okay, but you see, the problem now is that in as much as he had 5 wins, he is still in drawdown of roughly $500. Okay, meaning that his account is not even up to the equity he used, which is $10,000. And Trader A had 6 losses and 4 wins, but with a consistent risk portfolio, and he was able to make 7% in total. Okay, and this guy is already minus 5% drawdown. Okay, so with these few ideas, you can see that Trader A is a much better trade and he can stay in the game long term. A trader with the mindset of Trader B would get tired one day and he would quit, okay? Because he is only after the money. He doesn't want to follow the process, okay? But if you have something consistent, you would be better than where you were. You understand? So use this as a proper guide to have a clear understanding on risk management. Okay, then that brings us to how to calculate the lot size to use in a trade and how to have a valid risk management. Okay, now let's use trader A's concept. Okay, for you to risk zero point 0.5 and to risk this amount, okay, there's a certain amount of lot size you're supposed to use such that even if the trade goes against you, you are only losing the 0 0.5 you are risking. You understand? So, that being said, I would show you how to calculate your risk management and how to do it better. Okay, now let's go on the chart, then I would make it much better, easier in a bullish and in a bearish perspective. Okay, I'm not going to analyze chart for now, but I'm just going to show you something. Okay, now assuming this is a daily time frame, let me use the 1 minute. Okay, 1 minute will be better to explain better what I want to say, and I'll still use the daily time frame also. Okay, so assuming we want to take this trade, okay, we made our analysis and we want to let me say. Okay, we want to sell. Okay, let's say we want to sell and our risk is, you want to reach 0.5%. So what you do is this: after your analysis, after doing everything, okay, then you are to use your long and short position tool. Okay, I will do it in a sell setup and in a buy setup so that it would be easy to understand. Okay, I'm not going to analyze charts. I'm just trying to show you how it is done. Okay, then when you have a valid entry, let's assume that this price hasn't gotten up to this point and you want to sell from here down to this place. Okay, but then you just want to keep it consistent at making 5R on a trade. Now, this is a short position tool. You can get that in your this projection. You just see it over there, long and short position. Okay, now you go on that place you want to take the trade, you set it on this entry, and your stop loss should just be above your, you know, the POI. Depends on where you want to take your stop loss. Okay, and then your targets, you said you want to keep it consistent at making 5R on a trade. All right, so which is this low here. Okay, now for you to risk a certain amount of money with 5%, 0.5%, and still make $250 in profit, should this had it been that this trade, like before, you don't know what's going to happen, but if you have the probability was on your side that this trade would hit TP, you'd make $250, okay, and you're risking $50 to make it five times over. All right. So what you do is this: the stop loss here. If you look up, you see stop, and you see this figure here. So the stop loss is 2.5, meaning that this stop loss is 2.5 pips stop loss. Okay, and the risk to reward is 5.48. So if you notice, as I am moving this, the risk to reward is also going up. Okay, now for you to get five risks to reward, you have to keep moving in that direction until you get to a point where it is from five. Then, then uh, you now execute the trade. Okay, so let me show you how I calculate my pips so that I don't over leverage. Now go to your browser. Okay, when you go to your browser, you look for an app called, just type myfxbook.com. Myfxbook.com. So when it opens, okay, go to FS calculators. FS calculators. You would see it on your mobile phone, or if you're using a laptop. Then you open the FS calculator. Okay. When it opens my FS calculator, okay, then what you do is to open this place, which is position size calculator. Okay. Now, when this page opens up, it's gonna come up like this. Okay. So recall that you have a $10,000 account. So when the place they wrote account size, you put in your account size there, $10,000. Okay. Now you want to risk 0.5%. Just type 0.5%. Okay. Here they wrote stop loss in pips. So you go back to your your trading view. Check your stop loss. If it's 2.5, okay. If your stop loss is 3.5, so it moves depending on where you placed your stop loss. So in this scenario, stop loss is 2.5 pips. So you come back here, you write 2.5. That's all you are gonna do here. Sorry about that. You write 2.5, then you press calculate. Okay, when you scroll, you see what it gave you as results. So you are risking $50, which is 0.5%. Okay. Now this sizing, if you use two lot size on this account, okay, you are risking this figure. So if this trade should go against you, you will lose $50. But if this trade should go in your favor, you get $250. Okay, now you open your MetaTrader, you press the lot size, you know, go to the execution page, all right, where you place place the root new trade. Okay, you press in your sizing, all right, you place the root new order. Okay, you click on the new order, all right, then you see market execution, you see stop loss, sorry, you see market execution and some figures down below. Okay, now after the market execution, because this is a limit order, you will change the market execution to a limit order. Okay, since it's a sell market, so this is going to be a sell limit. You change the view to sell limit. Okay, now when you change it to sell limit, now this is what you put there. You would now put the lot size just after you put it on sell limit. Your lot size is what? Two pips, sorry, two lots. Okay. Now you press two lots just below the sell limit. You see a column like written 0.5, like depending on the previous one, previous lot size your account was on, because that is what is going to be registered there. Okay, then you just clean it out and put in the lot size you wish to use. Now, the next column is where they wrote price. Okay, so where they wrote the price, it should, depending on the MetaTrader you are using, if it's MT4, okay, you just see price and I think it's an ash color. Now, this is the pricing. The price is this 0.64889. You notice the next one, this is the current market price. Okay, this is not your entry limit. The one you are setting is the one created by your you created with this tool. Okay, that is why it's notice is an on ash color here and the stop loss is on red. So this is your entry price 0.64889. Your stop loss is the red one. So you go down again on your MetaTrader. Okay, you see the one with red line, that is your stop loss. You put 0.64914. Okay, and the next column is the one on green, which is the profit. This is my profit target 0.64754. So after setting all these values, this entry, stop loss, and your take profits, okay, you press place. You would see the market, the app will do like it's gonna circle and then will automatically execute your trade. Okay. Now when the market, you know, decide to come back here, let's assume that this was how this trade was. Okay. Now the trade started moving. Then you see they've triggered your order and that is just it. Okay. If you go back on your MetaTrader, you notice how it is moving, like you are already in profit, and that is just the simple explanation of how to take a perfect risk. You know, assuming that you are a trader on the 15 minutes, okay, you don't use the small stop loss. Okay, you have this big stop loss. Let's say you even trade on the 1 hour. Okay, I will show you how, such that even if you are risking, you are still risking 0.5%. It doesn't really matter the account size you're trading. What that matters is that you know what you're doing. Okay, so let's take a sell setup again before we go for the buy setup. Okay, so okay, now this is my chart. This is cat CHF on the 1 hour time frame. Okay, you had an analysis that here would be a perfect sell. Okay, because here is serving as your inducement at the moment. I don't want to analyze the chart now, but just for reference purpose, here is your inducement. Okay, you marked out this POI. Okay, and you want to do again 5R. All right, so for you to do this, look, it's showing that our stop loss here is 10.7 pips and this is 5.2R, based on the word. Okay, so what do you do here? You go back on this app. All right, go back on this app. Your account size is still 10,000. Your risk is still 0.5. Okay, the only thing that increased was your stop loss, and the stop loss here is 10.7. Okay, so you come back here, you just write 10.7. Okay, and press calculate. So it is 0.47 lot. So if you risk exactly this lot size here, you are risking $50 on this trade. You understand? In as much as you are using a 10.7 pip stop loss, if this trade should go against you, you are only risking $50. Okay, if this trade should go in your favor, you are still gaining the same $250. It is as easy and as simple as that. Okay, so after this, your markup. Okay, now let's see what happens. You see, trade already triggers your order and you hit your profits. Okay, because this trade here, it triggered this your sell order here, and this is profit. So the you made 10 to 50. Okay, so that is it for uh position sizing. Okay, then let's check in a bullish aspect of it. Okay, this is the bearish aspect. Let's check in a bullish aspect. They are all literally the same thing. Okay, it doesn't really matter the lot size, the time frame you are trading on. What matters is that you know what you're doing. Okay, and it should just be an anchor, some sort of edge over the market. Okay, okay. I think I've seen something to work on. You want to take this trade here, right? You want to take this buy here, right? Now, what you do is this: you just come on the chart after your analysis and everything. Okay, you use this other one, the long position. Recall that the initial one was short position. Okay, because this is a buy market. You are using the long position now. You click on it, place it on the tip of the line you drew, which should be your demand zone at this point. Okay, now you place your stop loss just below it. Okay, assuming this is, let's say, let's make it 9 pip stop loss. Okay, and you want to target 5R. Just you want to be consistent with this 5 risk to reward. Okay, what do? You come here on your my FX book. Okay, sorry, I made a mistake earlier. On this point, they wrote currency here. You change it to that particular pair you want to trade. By changing this to that particular pair you are trading on, okay, it has all the pairs that you can never think of. Okay, so this is still the same account size, 10,000, risk 0.5%, and then stop loss is 9 pips. Okay, so if you use 0.49, you are gonna risk $50 as well. If it should go in your favor, you are gonna gain $250. But if it goes against you, you are losing $50. It is proper risk management. All right. Now, if you lost the first trade, your account is no longer 10,000, but rather 9950. Okay. And you go again, assuming the second trade you had 5 pips stop loss, you just write 5 pips here. The risk is still consistent. You calculate. Notice how the balance went down to $49.75. So if you're risking this and this trade goes in your favor, okay, 49.75 multiplied by 5R, you are gonna gain $248.75 in profit. Okay, you are still risking the same amount over and over again. So regardless of how bad you are having a trading day, trading week, or whatsoever, okay, just keep it consistent. When you open my FX book, locate where you see FS calculator. Okay, when you go to FS calculator, go to position size calculator, you open it. Okay, now that pair you are trading, whatever pair you decide to trade, okay, as you can see, this has virtually all the pairs. If it's gold, you can calculate gold as well. Okay, it is that simple. Just put your account size. Okay, risk is what? 0.5%, and stop loss. Gold is kind of volatile, So there's a way at which their values are calculated. Okay. But assuming you want to take this trade from here, okay, and then you're okay, you're keeping it consistent at 5R, all right. Now look at gold here. Gold is XAUSD. If you click on this point, you see the stop loss 163.5. All right. Now this is the value you put in your FX book. Okay. Now you come here, you put uh 163.5, right? And then you calculate. So you see, you are gonna risk $50 if you use 0.31 lot size on gold. Okay, so it is that simple. It is that simple. You don't really need to know everything all at once, but grasp this. So no matter how much, you see people sometimes, you see people use 10 lots, 50 lot, and you think that they are over leveraging on their account. No, they are not over leveraging. Rather, they have understood the concept of risk management. Okay, so regardless of any account size, once they decide maybe to risk 1% of it, it is you're gonna see some kind of crazy lot size, and you think that this person maybe doesn't know what he or she is doing. Okay, they have understood and mastered risk management, so their losses are minimal and their wins are actually booming. Okay, if you can make even the least 3R in a trade, this is so much money over time. Okay, so that is basically it on risk management, and I believe that I I took my time to explain this concept very well. Okay, it should help you as a trader to do better. Okay, it would help you as a trader to take good setups. Okay, and make the best of it. Okay, so that is all for risk management. Okay, so have a wonderful day and don't forget to subscribe to our channel.